Hello, and welcome back to Explain the Charts. Today, September 9th, 2025, we're diving deep into Alphabet Incorporated, ticker Google, following a period of significant market activity. The biggest news-dominating headlines is the highly anticipated federal antitrust ruling regarding Google's internet search business. Federal Judge Amit Mehta delivered a more favorable than expected decision, which saw Google's stock surge to a record high. This ruling allowed Google to retain its Chrome browser and continue its crucial payments for default browser placement, specifically with Apple, a deal estimated at over $20 billion annually. While new agreements are limited to 1 year and cannot be exclusive, avoiding a radical breakup or divestiture of Chrome was a massive win for Google. Wall Street analysts, including Wedbush's Daniel Ives and Citi's Atif Malik, largely viewed this as a green light for continued growth and even potential for larger AI-related partnerships, like with Apple's Gemini. However, it's important to remember that Google still faces another antitrust case concerning its online advertising dominance, with hearings for potential remedies slated for later this month. Now, let's turn our attention to the charts to see how these events have impacted GOOGL's price action. Looking at the one-day chart from April 2024 to September 2025, we can observe a general upward trend interspersed with notable pullbacks. Early in 2025, around February, we saw a significant dip where the price fell from over $200 down to around $180 before finding support and beginning another climb. Another notable drop occurred in early May 2025, where Google tumbled from approximately $164 down to $151, marking a substantial correction. This period might reflect general market anxieties or specific concerns about economic cyclicality and intense AI competition, which are identified risks for Alphabet. However, the stock recovered steadily, building momentum through the summer of 2025, eventually reaching above the $200 mark by mid-August. This steady climb suggests underlying confidence in Google's core assets, Google Cloud's growth, and its AI monetization strategies, as highlighted by EBC Financial Group and other analysts. The most dramatic event on this chart is the massive bullish candle on September 3, 2025, where Google closed at $230.66, reflecting a 9.1% surge. This monumental jump is directly correlated with the favorable antitrust ruling we just discussed, which avoided the worst-case scenario for the company. The stock's ability to maintain these gains, closing higher at $232.30 on September 4th and $235 on September 5th, indicates strong investor conviction post-ruling. Currently, as of the market close on September 8, 2025, Google is trading around $234.04, showing some slight retracement, but largely holding onto its gains from the initial surge. This suggests a period of consolidation after the significant news-driven rally. From a technical perspective, the price level of approximately $230 is now acting as immediate support, having been the strong breakout point. Prior to the surge, resistance was likely forming around the $210 to $212 area, which has now been decisively broken. A more significant long-term support level, if the current consolidation breaks down, would be around the $190 to $200 range, which represented previous highs before this major rally. Let's zoom into the 1-hour chart to examine the intricate details of this recent price action. We can clearly see the hourly candles forming during the incredible run-up on September 3, 2025. Notice the high volume accompanying these bullish candles, reinforcing the strength of the move and investor enthusiasm following the antitrust news. The immediate aftermath saw continued upward momentum for a few days, indicating sustained buying pressure. If we filter the candles to just the last few days of trading, say from September 4th to September 8th, we can get a clearer picture of the short-term consolidation. Here, the price made an intraday high of $238.13 on September 8th, but faced some resistance, leading to a slight pullback by the close. This microtrend shows buyers and sellers actively battling for control, forming a tighter trading range after the initial euphoria. Now, switching to the 15-minute chart for an even finer look at the recent trading hours on September 8th. This chart reveals the intraday volatility and attempts by Google to break higher, particularly around the $237 to $238 level. You can see several candles testing these levels before pulling back, suggesting a short-term resistance area forming. The increased transaction count on the hourly and 15-minute charts during the initial surge and subsequent consolidation periods indicates high market interest and liquidity. This active trading is expected for a major tech stock like Google following such significant news. We also observe moments of decreased volume during quieter periods, such as after hours or specific intraday lulls, which is typical. The overall picture across these timeframes points to a stock that has achieved a new, higher price baseline due to a fundamental shift in its regulatory outlook. However, sustained upward movement will likely require further positive catalysts or a clear breakout from this consolidation phase. So, what are the reasons to be bullish or bearish on Google right now? Bullish sentiment is strongly reinforced by the favorable antitrust ruling, removing a significant black cloud of regulatory uncertainty. The continued partnership with Apple, Google Cloud's robust growth, and the successful monetization of AI across its products like Gemini and AI Overviews are powerful long-term drivers. Analysts predict average 12-month price targets of around $227.62, with optimistic scenarios reaching $400 to $500 plus by 2030, assuming accelerated AI adoption. On the bearish side, the ongoing advertising antitrust case remains a concern. A less favorable outcome could impact its ad revenue streams. Intense competition in the AI space from rivals like OpenAI and Microsoft Copilot also poses a challenge to Google's market share. Economic slowdowns could negatively affect advertising spending, which is a core revenue source, potentially leading to pullbacks. Execution failures in other bets like Waymo or high-cost cloud infrastructure are additional long-term risks, although the current momentum is strong. To recap, important price levels to watch include the immediate support at approximately $230. If this level holds, it indicates strong buyer interest and confidence in the recent rally. Should we see a retrace, the next key support would be around $225, which also aligns with several analyst average price targets before this recent surge. A more significant long-term support, representing previous highs before the latest breakout, sits around the $190 to $200 range. For resistance, watch the recent high of $238.13. A decisive break above this could open the path towards $240 or even $250. In terms of predictions, there's a high likelihood of continued consolidation above $230 as the market digests the recent news. A moderate likelihood exists for a retest of the $225 support if profit-taking or broader market weakness occurs. The probability of reaching $240 to $250 in the short term is moderate to high, contingent on positive developments from the upcoming antitrust case remedies or further AI advancements. Conversely, a significant retest of the $190 to $200 levels is less likely unless there's substantial negative news or a major economic downturn. Traders should also monitor volume closely. A drop in volume during consolidation could indicate weakening conviction, while a surge during an upward move would reinforce a breakout. Keep an eye on news related to the next antitrust hearings, Google Cloud's performance, and any announcements regarding AI partnerships, as these will be critical catalysts for GOOGL's trajectory. Thank you for joining us on Explain the Charts today, and happy trading!